let's begin. And again, my name is Mark Ellerben, and I'm the Vice President of Sales and Marketing for FMS. I've been with FMS since 2000. And John Klein is the Vice President of Client Services, and he will be joining and leading the back part of the seminar and actually going over the numbers. John's responsibility, he works directly with many of our customers in delivering their accounting and payroll numbers and P&Ls and balance sheets and benchmarking reporting. So what we're titling this webinar is called the FMS Quarterly Report, and this is something new for us. For 20 years, we've been producing an annual report with NGA, and what we thought would be interesting and helpful maybe going forward is giving quarterly snapshots. So a little bit about today's agenda is we're going to tell you a little bit about FMS so you can know sort of where this information is coming from if you don't. And then we're going to go over an economic review, looking at the last year in 16 and really the isolating and narrowing down on Q3 of 2016, and then we'll talk about what that Q3 looked like from a performance review from our numbers that we have. So a little bit more about FMS. If you're not familiar with us, we've been around since 1974. We've got 3,500 stores, about 500 clients or customers that represent 3,500 stores, and you can see that our mission in life is to help retailers succeed. And the way we do that is we provide mission-critical information and software and accounting and payroll and reporting and all kinds of best practices that do help our retailers succeed and compete in the marketplace. So you can look and you can see sort of where we're scattered about, or the stores are. We have a few states that we don't have any customers, I think 3, but we're mostly, you can see, permeated in the Northeast and Midwest, and we're beginning to, grow some more traction on the West Coast, and we've entered into to Canada. So we opened an office there this past year, and we are marching in Canada, looking for new business. So this slide here gives a snapshot of the full report that we work with so closely with NGA on. And you can see on this slide also that we do a wholesaler breakout for AWG as a support for their members. So each year, the total report gives a report card on the independent as a whole, and then also gives a report card on how AWG operators fared separately from that. So I think I'm about ready to hand this over to Mr. Klein. I'm hoping that Mark, you are on the call with me.
I am, Mark. Thank you. Welcome everyone to the webinar. As we have, and Mark can speak to this better than I, because I've been with the company since 2009. We have, in conjunction with NGA, have done the only report, the financial report on the independent grocery retail business for about almost 20 years now, and we get a lot of questions, a lot of requests for this information. The one repeating criticism that we've gotten, the one has been, it's great information, but you get it to us 5 or 6 months into the next year, and as we're doing benchmarking and budgeting and other analysis, it's a little bit late for us. So, Mark and Eric and I sat down after the last one was published and said, what can we do to get more information more readily available, more quickly out to our clients to make more, again, it's if your competitors are running a 25% grocery margin and you're running 23, you need to understand why that is and make in-course corrections. So to that end, we're going. We surveyed over 700 stores for this information for Q3. We're still doing the typical year-end one. Mark has committed the resources this year to turn that out more quickly. Typically, it's May or June. We're certainly going to try to get that out prior to that this year. Again, because the information is such good information, but it needs to be delivered more timely. So the first thing we do when we review the survey results is we try to give an idea of the economic backdrop. I'm certainly not an economist, so I'll hit this pretty quickly. The prime rate for in the U.S. has been fairly stagnant for the last really since 2009. We did see a quarter point increase in June, as well as another quarter point increase in 16. I noticed on the news this morning that they're talking about increases through 2019 at this point. Apologies for the cold and the cough. The GDP continues to be sort of up and down. It looks, Q3 number, the unadjusted Q3 number is mid threes, which is outstanding. It likely will be adjusted down once all the factors are in. But point of this is it's a little bit odd to see. Usually, the primary tool in their toolbox for the Fed to control inflation is to raise interest rates. Obviously, if you raise interest rates, cost of capital goes up. There's less investment, and the expansion of the economy slows down. It's a little different this time in that we're seeing inflation stay relatively flat in total, and frankly in food at home it's negative, as you guys all well know. So it's interesting to see what happens in our economic environment as they do raise interest rates. Admittedly, they're at an artificial historic low number, and they're trying to adjust it more to market, but it'll be interesting to see what it does to our economy. As you can see here, food inflation, food at home inflation is negative through September of 16 for the 12-month rolling period. It was negative 2.2. You can see that in Q3 by period, negative 0.2, negative 0.2, negative 0.1. I looked up earlier, the Q4 number is negative 0.2, negative 0.1, negative 0.2. So if you annualize something on a monthly rate of negative 0.2, that's 2.4% for 12 months. So at least for the back half of 2016, we're seeing inflation that is essentially on par with what we have seen throughout the previous 12 months. So I talked to a retailer recently. He said the guidance that he's hearing is that some of the commodities they think will rebound in price in the middle of this coming year. I thought we heard that last year too. So we'll see how that corresponds. Certainly, it's a double-edged sword. You have to sell more product, more units of product to get the same number of sales, and selling more product means you've got more unloading costs, more stocking costs, more cost to handle. And then, historically, inflation has been a nice buy-in hedge for our industry to make essentially forward buy on the stock that you already have. So it's been a tough economic environment relative to inflation for our retailers. And in a few minutes, when we look at margins, I think you'll see the continuing impact of that. Again, relative to the economy, unemployment remains low. We hit 4.9 back in Q1. It's remained steady. I think the big takeaway from this slide as we look at what's going on is 62.7% is the participation rate in the labor force. That is low compared to history. Normally, it's a good 10% higher than that. We've got an aging population. We've also got folks who have just said, you know what, although the economy's better, I still can't find the job I'm looking for. And I think, as we all know, the government competes with all of us who pay hourly rates. It's difficult to convince somebody to work when they can earn money from our government and only get about $1 an hour raise to go to work. I read an article the other day on fast food workers, for example, who are leading the charge for higher minimum wages. That we've really seen an inversion in their workforce. They're getting older and raising families. Fast food jobs, historically have been considered grounds for teenagers. Not the case anymore. Over 2/3 in the study I saw were adults who have families. Difficult. You can understand why they want more money. End of the day, though, the job has to be able to pay for that. So we threw this slide in. First, I thought it was a typo, and then Mark and I reviewed it together. This is a fairly typical grocery store, except it doesn't have cash registers. And if you think about the economy and the competitive environment of what's going on, this could well be one of the new Amazon markets where there will be no checkout stands. So always bear in the back of our mind, competition continues to creep up from all sources. So a bit of a plug, no cost. If you log on to our website, fmssolutions.com, you can sign up for the FMS Pulse. It is a weekly look at year-over-year sales. We poll customers that total about $7 billion a year in sales. So it's a good from all segments of the geographically of the U.S. It's really a good indicator each week, a snapshot of how our customers' sales look on a year-over-year basis. Good way to look at yours. If you look for 2015, we were for the full year we were about 1.3% below the 2014 performance. 2016 Q1 was about 1.3 under what it was for Q1 2015. We actually saw a bounce back in Q2. It was essentially flat, and Q3 was essentially flat. We don't have those numbers compiled yet for Q4. I suspect they're going to be about flat as well, based on seeing what I've seen on a weekly basis. But maybe the trend has improved. Maybe we will start to see sales stabilize and a chance for our customers to do better in terms of sales. Getting to the meat of what we wanted to talk about today, if you see in the last two columns, the 2015 distributions and margins compared to Q3 year to date. Again, there are over 700 stores that participated in the information in here, so it's a nice survey size. What I took away from this is center store is, and I review, to Mark's point, I'm in charge of everything that touches our clients. I'm in charge of. I'm a CPA, so I still see a lot of numbers. I still do a fair amount of actual work with our clients. What concerns me with the numbers so far, again, it's through Q3 versus full year 2015. But when I look at center store and see grocery, dairy, frozen, grocery down, what is it, almost 3%, dairy about 1%, and frozen, 3% as well. That's concerning. Certainly, it's driving this 25.71 versus 27.26 a year ago. Some of the commodities needs better. Produce is very strong, but when you think about grocery, dairy, frozen, that's roughly 50% of the sales in our stores. And to see that we've got a 2%, well, 1.9% hit, whatever that number is, I can't do math anymore. It is concerning, and I will say it is that corresponds with what I've seen on P&Ls year to date. I had a call this weekend with a customer. These Q4 numbers can't be right, and I deep dived into the numbers. Like, well, yes, they are, and so you start asking why. These survey results really do kind of correspond with what we're seeing. If you take a look at net profit before taxes, so although we're seeing softer margins, we are seeing better performance, or at least flat performance in net profit before tax. You go back to 13, we were at 1.5. 2014, which was a very tough year for many retailers, 0.9. 15 was 1.44, and through Q3 is 1.45. So it's about flat. You can see that labor and benefits continue to be a massive amount of expense for our retailers. We certainly see it climbing, but the good news is that although we saw flat margins or lower margins than we're accustomed to seeing, you guys are doing a great job of balancing your expenses against that, and certainly it helps that our sales are no longer flat against or negative against prior year. They're more flat. So, I think it'll be interesting to see what Q4 holds. We typically see better margins in Q4. There's a lot more vendor money support out there. Mark, I'm not certain when we'll see those results for Q4. Maybe or in a couple of weeks is what possibly is. Do you have some insight on that?
No. I mean, it's so hopefully in the next week and a half to 2 weeks, we're going to publish and solicit the full data from everybody through NGA, our partner. So we'll have to wait to get to that and then hammer it out like we've done in the past. Our goal is to have this faster the end result. Hopefully sometime in the month of April. So but going forward through 17 through this next year and beyond, we would think we hope to give a quarterly snapshot. And that quarterly snapshot will actually be about 30 days from when the quarter ends. So that'll give our customers and the independent retail segment an idea of what's going on throughout the year, so that we don't have to wait all year long. But because look, with with the way the business works in the supermarket business, you've got a lot of volume flowing through your stores. If you need to make adjustments, you need to know what's going on. So that's our goal, is to better inform going forward. So, and John, to your point, go ahead.
I was going to say, the other thing is if there are different areas or different touch points or other things you would like to see in the survey. This is NGA and FMS have done this for many, many years. So feel free to contact, your NGA contact, Mark or me. Our respective our phone numbers at the top of this slide. I'm 2 touchdowns. 1414 is my extension. You're welcome to call anytime. If there are other things if you think this is sort of outdated, or I'd really like to see this, hit us with that. We're always looking for ways to improve. Contact NGA. They are wonderful partners in this, and we do think it's something that we want to continue to do. So if you think of ways to improve it, please let us know.
Yeah, and also we would encourage you to participate. Sorry, be looking forward in the next week and a half. When you participate and fill it out and send it in, you get a free hardbound copy of it automatically sent to your address. So we would encourage you to do that. And we thank you for coming on and spending 20 minutes with us. Next time, Eric, I think we'll probably put this as a 30-minute segment rather than an hour, because it is sort of a short and sweet type thing, just to look back at the quarter. But again, thank you for your participation, and we're looking forward to one of these in another